Capital gains tax exemption on investment in startups. In order to boost investment in startups and to provide tax relief to an individual, or HUF, who have sold residential property, the central government through Finance Act 2016 had amended the provisions under Section 54GB so as to provide exemption on long-term capital gains from transfer of residential property, if such capital gains are invested in subscription of shares of a startup company subject to certain conditions. In continuation to our startup series, let us look at the capital gains exemption available to investors of startups and the conditions to be satisfied in 6 of the series. Provisions applicable to startups. Section 54GB of the Income Tax Act 1961, IT Act provides exemption from tax on long capital gains arising from transfer of a residential property owned by an individual, or HUF, if proceeds from such transfer are utilized for subscription in the equity shares of eligible company and conditions provided under the aforesaid section are satisfied. Eligible company means a company which fulfills all the following conditions. The said company is incorporated between the start of the previous year, in which capital gain arises, and the due date of furnishing income tax return for such previous year, as applicable to the assessee. It is an eligible startup, engaged in an eligible business, refer definition in our Alert 2. Individual, or HUF investor, has invested more than 25% of share capital, or voting rights in the said company. The provisions of this section shall not apply for transfer of residential property after the 31st of March 2022. Conditions to be satisfied for claiming exemption. Net consideration of proceeds from transfer of a residential property are utilized by individual, a HUF, towards subscription in equity shares of an eligible startup before the due date of furnishing income tax return. The eligible startup must utilize the amount invested to purchase new assets within 1 year from the date of subscription in equity shares. In case the consideration is not utilized by the eligible startup for purchase of new asset within the due date of furnishing of income tax return applicable to individual, or HUF, the same shall be deposited in capital gains account scheme before the said due date. Further, the income tax return furnished by individual, or HUF investor shall be accompanied by proof of the said deposit being made. The aforesaid deposit along with actual amount utilized for purchase of new asset shall be construed to be cost of new asset. The equity shares of the startup company held by the assessee and the new asset acquired by the startup company shall not be transferred within a period of 5 years from the date of its acquisition. In case the new asset is computer or computer software, it shall not be transferred within a period of 3 years by technology-driven startup, as certified by Interministerial Board of Certification, IMBC. New asset refers to new plant and machinery, PANDEM, but does not include the following. Any PANDEM, which before its installation was used either within or outside India by any other person. Any PANDEM installed in any office premises or any residential accommodation, including accommodation in the nature of a guest house. Any office appliances including computers or computer software. Any vehicle. Any PANDEM, the whole of the actual cost of which is allowed as deduction, whether by way of depreciation or otherwise, in computing income chargeable under the head profits and gains of business or profession of any previous year. Quantum of exemption under Section 54GB. Following is the illustration for computing quantum of exemption available from capital gains income under Section 54GB. Case 1. If net consideration from transfer of a residential property, cost of new asset, the capital gains shall be proportionately exempted based on the cost of new asset to the net consideration, as computed in the below table. Case 2. If net consideration from transfer of a residential property, cost of new asset, the capital gains shall be fully exempted from income tax, as computed in the below table. Consequences of default. Contravention, in case the deposited amount is not utilized, wholly or partly, by the eligible company for purchase of new asset within the period of 1 year. Consequence will be the difference between the following shall be taxable as capital gains in the hands of individual or HUF investor in the previous year, in which the period of 1 year for acquiring new asset expires. The exemption allowed under Section 54 GB of IT Act, and the exemption that should have actually been allowed based on the actual amount utilized for purchase of new asset within a period of 1 year. Contravention. The eligible company transfers the new asset within a period of 5 years or 3 years, as the case may be, from the date of its acquisition, or the individual or HUF transfers equity shares in the eligible company within a period of 5 years from date of its acquisition. Consequences will be the exemption earlier allowed under Section 54 GB of IT Act shall be deemed to be income under the head capital gains of the previous year, in which the new assets or equity shares are transferred in the hands of individual or HUF investor.